now we've got our guest from industry. So today we're going to talk about insurance.
Sure.
As much as you can talk about insurance. You know, I wonder where does the concept come from, and you know, is it real? Insurance. Can you insure anything, Mitch?
Well, you certainly can. Part of the family I'm part of in terms of the insurance global network is Lloyd's of London. So we are known to, amongst your, I take it you have little ones?
Yes.
So we insure some of the best artists out there. We insure their legs, their mouths, their voices. You can insure your rings, you can insure this, that, the other. You can insure yachts, boats.
So it'll be interesting to know, where does the phenomenon of insurance originate from, and maybe you can ask him a little bit about it. But Mitch, we're very pleased to have you here today. I know you're also hectic and busy, but thanks of sharing it in this circle around your almost view on leadership in insurance. Because as a leader in your own right and as executive, I think you've got a lot to share, and I hope that we can listen today to you and take some lessons learned from what you bring from a leadership perspective, even be it a managerial leadership perspective from an insurance industry. So welcome.
Thank you very much, everybody. I feel absolutely intimidated by all these terms of pestology and ology, and I feel like I'm in the wrong ology at the moment. But let me just explain, quite frankly, I'm very tactile, so I come from a non-academic background. I'm the kid who didn't get the right marks to go to school or to higher learning, and was blessed to be a young dad and discovered higher learning later. And I've never looked back. So I've been blessed to do some higher studies, and I understand exactly some of the things you're doing now. And there's some of the things I want to thank you for, Aslam, which frame some of my thinking, which is your philosophy will determine your methodology. So in fact, we're always informed by something we believe in or where we come from. And it probably frames our life in many ways that we don't, whether it's religion or circumstance or depravity or privilege or whatever. And I think part of my journey as a very tactile person is informed by exactly that. So if I may just go back 100 or so years, I've not been around that long. I'm very blessed to have had in my family and on my maternal side a gentleman who formed an army, and it was an army to take women off the streets with kids. They're born in the Industrial Revolution. It was all the elements that you see in our society today, people of the robots, the equivalent of that, the streetwalkers, what it was. That gentleman was known as William Booth, and he's the founder of the Salvation Army. So his sons were sent to South Africa. Two of them, one was sent to Southern Rhodesia and one was sent to South Africa, and I happened to be one of the offspring from that. So heavily informed by, one, the turn of the economics of that era, when the Industrial Revolution took off. So I find it quite relevant what you're talking about in terms of the transformation agenda and the current society, as well as where society found itself on a different continent 100 years ago. You know, so where issues of race, things we become comfortable with in South Africa, actually born irrelevance. It is pure class, and whether you're male or female or gentry or whatever. So my philosophy certainly has informed my methodology of the last 17 years. If I could put that there. Then in terms of insurance, I happen to have fallen into insurance. Very few people wake up and say I'm going to study insurance as a career. I was lucky enough to get a job because the banks wouldn't accept me. So I went to the Federated Life and was a life insurance clerk, and I worked at pension funds and went to the JSE and had a bit of an entrepreneurial background, and in fact became one of the few what I called non-black gentlemen that owned a few what was called black taxis in those days. I did long haulage from Ferreirasdorp and whatever, and then was intrigued by the JSE and went to work there, and then JSE crashed in '87 and I found myself back in the safe haven of insurance. And my wife says, you've got a child, now you've got to get a degree and study. So I started studying. I did something, and I went FCIS, and I was lucky enough for people to believe what I do and say. and eventually I ended up as the Vice President of Operations for AIG South Africa and Africa. So I handled the reinvestment of the American International Group back in South Africa in 95, 96. Hence my management journey truly started at that point. So that was a very sort of real induction into what I'd call the global world of insurance and our space in the world. So we were still coming out of the euphoria of 1994, 1990, freedom and rugby, and it's amazing. We were champions of the world and the world loved us. And then in the economic space, I discovered the Americans don't care, actually. So in my space, in managerial, managing the global context of AIG as a multinational, and South Africa's globalization, I found that there was a disparity between our needs as a country, as a society, as a business in South Africa, as well as the American and global ambitions. They wanted open borders, they wanted free trade, and we wanted protection, and we wanted mass employment and massive injections of capital. And so we marched on this journey together, and I wanted more money, and the Americans would tell me, Mitch, you don't understand, the money goes one way. So I'm sure you've got cash flow budgets back to Treasury.
You just got a bigger responsibility. You look after AIG. They've got a good soccer team that they're supporting.
No, there was a good soccer team. It's Aon now. So we then found that the world loves us to a point that it's useful to the world.
Yeah.
And we got out of romance very quickly with a big local agenda. On the finance side, we had an objective of developing a AIG in Africa and South Africa. So that was my real induction into management. Prior to that, I was gifted enough and blessed enough to be looking after the Lion of Zimbabwe as a young man and setting up insurance companies in Namibia and little businesses in South Africa. I don't know why my managers believed I could do it, but they trusted me, and so my path is very much a genuine path. That being said, I then embarked on, I realized I needed to fill a academic gap in my, I think I saw all these MBAs were earning a hell of a lot of money. So there's something wrong with my little studies, and so I embarked on an MBA. And it was the most amazing exploration of knowledge, industry, and alternative managerial science, and that I went on. And it was the best time. It was a executive MBA. So we had the breakaways, and it was not a formal program. I'm not sure, I won't mention the institution now. So it's a global institution. And then I got to my thesis and got stuck. And then my sponsor at the time said the most profound words which shaped my career for a while after that, which was, don't confuse motion with progress. So you can run around, research, do, look, go wherever, don't confuse motion and progress. And those are great elements that I took from that. But in essence, I think insurance is about, there's life insurance and short-term insurance. What do you guys understand about insurance? What do you feel about insurance? Does it invoke a sense of, hey, I've got an insurance policy, and fantastic? Or is it a grudge purchase? Or is it...
It's a grudge purchase.
It is.
Often, if I at the time I took an insurance, it wasn't because I wanted to, because more because I had to. It was more security somewhere along the line.
And that's both life and short term.
Life and short term, I'm still to see some real investments coming towards us.
Well, I'm happy to inform you that if it's life insurance, your wife's next youngest partner will enjoy the benefits. But if it's short-term insurance, your new shiny car will arrive soon, or whatever.
That's been sincere.
No, but we've basically got a very bad rep as an insurance industry because it's a grudge purchase. There's risk out there, but risk in and of itself is just part of life. So you out there, you take a risk. You walk out there, you take a risk. You can offset that risk. You can transfer that risk. You can mitigate the risk. In other words, just try and stop risks from happening. You can wrap your kids in cotton wool and bubbles, but it's out there. So, according to some of the historians, risk insurance, or short-term insurance, is actually a proponent of insurance. The Chinese were the first real insurers. So what they would do is they would have mass crops of their product that they would sell across to Southeast Asia, and believe it or not, to Africa. And so, as much as Vasco da Gama and all the guys thought that we were first, the Chinese were here long before. And their method of insurance was to send out a flotilla of boats. So if you were a merchant, tea merchant, or a spice merchant, or a China merchant, or whatever it was, you would spread your risk across each boat, because the storms could take any one of those, and you stood the benefit of hopefully 4 or 5 of the 10 flotilla arriving. So that was the very first sort of concepts of insurance that were out there that we get that in recorded history. Lloyd's of London took it further, and they had a big trading sort of thing from London, and the guys met in a coffee shop. The gentleman's surname was Lloyd. I'm trying to get his first name, and all the traders would meet there, and there they would hedge their bets. And so they would all be sending out the ship of nutmeg or gold or whatever it may be, or sugarcane or whatever we grew from the thing. We put it up on his coffee shop wall, and then people who wanted to share in the risk at a premium, which is the first concept of a premium, where you pay, would underwrite their name. So they'd underwrite, I Mitch Marescia will take 5% of the risk, or I, Aslam, will take 10%. And so we became known as insurance underwriters. It was simply underwriting your name on a risk that is about to leave the port. So there's a history of insurance, and I won't go into too much of that. I was sort of spoke to Ben about what it is that I could talk to you about, given that I'm from industry. And I thought, well, the only thing I can really talk about is the journey that I've walked. I can talk about the industry, I can talk about where we are as an industry, I can talk about our global forces, I can talk about the challenges we face. But essentially, we are carrying the brunt of just the economy. We are lubricant to society and economy. So in my space, as you may have seen from the brochures, we are liability insurers. So if you imagine 2 sides of a balance sheet, there are assets, so your car, motor, buildings, whatever else. Then there's your liabilities on the other side. We insure that side of the balance sheet. So where things can go wrong, in terms of you being sued on the negative side of your business, or different elements, that's where we are involved. If you were to look at a pyramid of insurance, on the commercial side, which is our focus, we probably sit in the top 5 percentile of what is perceived of the hierarchy of insurance. So we will, in fact, you're one of our clients actually. Yes, so that's, believe it or not. And we participate in that sphere. Now, if you look at our society around us, so we want to emerge this economy, we want to make it happen, we want to grow. Yes, we're in a bit of a state at the moment, but go back. We're hoping for 5-6% growth rates. What does it mean? Insurance is a lubricant to commerce, a grudge, nevertheless. And where do we play our part in that? As Camargue underwriting managers, myself, I left AIG in 1999 and started consulting with clients. AIG was my very first client. I sat on their board, I did the company secretarial work, governance work, operational speccing, IT, etc. So I'm from a very sort of operational paradigm in terms of insurance. I then thought, no, there's more, and the vexing questions of our society are so profound that it's not been answered by the current situation. So I left as a young lad to go and do some reflection and study, and acquired 16 corporate clients, which I was very happy with at the time. Stayed on the board of AIG, and coming straight out of the thought process that had emerged out of my MBA studies, which is amazing. I mean, it's like, opened up questions in my mind. And there was a word called sustainability that started to emerge in 1999, 2000. And what does that word sustainability mean? We use it like it's nothing today. It's almost like one of those phrases, but it's actually quite a vexing question. So where are we going to be relevant as a industry and as a service provider to the economy? So I checked myself out of corporate South Africa, went on this path, and started testing those questions with my clients on the ground. And there are many large clients. In fact, one of our biggest clients is Technicon SA, which is now part of UNISA. I'm pleased to say I insure all the tertiary institutions in South Africa as a result of that, for different elements of liability, labour, etc., etc. So I'm well aware of the shenanigans that professors get up to. Which is one of the products we do. It's called employment practices liability. So, and so we took ourselves on this journey. I took myself on this journey, and then I spoke to my partner at the time, who was about how we could bring something of relevance to market. And we looked at I said, okay, hang on a second, insurance is insurance. It's that same grudge you talk about, it's the same issue you talk about, whether it's outsurance or this one or that one. How do we make this product called insurance relevant to an entrepreneur at an SME level? Because by then everybody is talking on platforms about the SME of the future, it's going to save, it's the future employer of the country, blah, 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 blah. And we're sitting 15 years later, we still don't have many facilitation elements for the SME businessman. So I thought, well, the vexing question was, how do we facilitate it? And then we called it what at the time was the insomnia factor. So what makes a man or lady with a great idea, product, spices, engineering, whatever it is, go to market and say, I want to trade. When they wake up, got a product, amazing. I need capital. I need people. I need market. I've got product. And then what are the insomnia factors that keep them awake at night? What are the things that help them? So we looked at this product called liability insurance and tried to fashion it around that, the S of the SME, in terms of facilitating their business relevance. We benchmarked it at that level, the pricing, etc. So bearing in mind, we took all these high-end products from the States, London, China, all over, and brought it down to that level. And that became known as what we call our M-cubed philosophy. So we put a client in the center of the triangle, and we said, we're going to help you manage your business. So when you wake up and you go, I'm great at engineering, but I'm not great at these other elements, you call us. We'll have an element for you. Then if you have an incident, so it might be a disaster, it might be a dispute, we will help you mitigate. That's at one end of the triangle. The other end is when there's a net loss to your business, which could cripple you personally, financially, or your entity, we migrate it to the insurance policy. So from that we got our MQ, which is to manage, mitigate, and migrate. And that became a founding philosophy of everything we do. And we started very deliberately at the S of the SMME. That being said, it then made our journey a lot easier going forward. So finally I had the ability as a businessman to start with a clean slate. So if we take a large corporate, they've obviously sit in a paradigm of restriction of staff numbers, history, how they trade, etc., etc. And then to react, so if you're the IBM and there's an Apple emerging there, how do you respond to the Apple? How do you make yourself more maneuverable, etc., etc.? Very difficult because you've got so much ingrained DNA in the business and management. And phrases that you'd have learned through your studies were, okay, create intrapreneurs. And what does that mean actually? What is an intrapreneur? Unless somebody has an equity in the business, unless they have a vested interest in the outcome of that entity, they are not an owner. And if they're way down the chain, they're less of an owner, they're an employee. Simple as that. So every large company today begs to start afresh with a clean slate and some great ideas, fresh capital, fresh insights, great people, etc. I was lucky enough and hellishly scared at the time to start with a clean slate. So what do? We go and source capital. So what does capital mean in our industry? Find a risk partner. At the time, Holland were doing amazing things. They believed in our philosophy. We put it out there as a business plan. It sounded a bit like feng shui, what we were talking about. No, really, I mean, if you understand that the insurance industry is made up of baby boomer, grey, old male fossils, it is what it is. I'll call it what it is. And we'll come back to people as to how that influences people. But we're talking about a whole new paradigm of looking at product, insurance, etc. And then sourcing a license was also a new interesting time. And then to compound all of those things, we decided to launch at a very exciting time in the world, which is 2001, when people were having global catastrophes, when 9/11 happened. So we never chose a very easy time to start this little business, where nobody wanted to touch this thing for liability. Planes are falling out of the sky, people are going to war, banks were failing, dot-coms were bombing out, there was the bubble post the 2000 Y2K issue, etc., etc. So we said, hang on a second, believe in us, we've got some idea here. So I spoke to the local market, and the local market believed in us, and then we set off. We set off by taking a product, an idea, a concept of putting the SMME at the center of insurance and creating a business empowering product. We did so with great idealism and went up Uhuru Peak to sell the highest insurance policy on land. So if you go into our things, it's a Guinness world record, so it's the highest policy on land, but you can get records for anything these days. And came down the mountain, and we thought, now the journey starts. What happens? So we had to go to the very traditional markets of insurance, and as an underwriter, underwriting on behalf of an insurer, Holland at the time, we had to convince our distribution channel. So we had to find a distribution channel, and that's you'll know them as brokers, or we call them intermediaries. And you have to convince them that there's a different way of doing things. There's a different way of approaching product for your client. And I can assure you, brokers, is anybody a broker here? No. Sorry, apologies. No idea.
Broke my plate yesterday.
You broke? They're very broken. They didn't buy into this. This was too much to understand. It hurt their heads. They want to go and sell your policy, collect the commission, run away, leave you, and hope you don't have a claim. It's all idea of integrating with your business from ground up. So from incubation mode to fulfillment of your promise as an entity, walking the road with you is anathema to them as an industry, as a sector. So we're up against that. The second element that we're up against was just South African society in general. We were saying, well, this is quite a sort of what I'd call a high fidelity approach to insurance in a very niche sector. So who is going to do this with us and for us, and how are we going to do this? I looked around my colleagues in my old companies and whatever else, and I thought, sure, so who could meet these goals of higher thinking, aspirations, risk transfer, etc., etc. And there sadly was not too many people. In fact, there was probably in South Africa, I could rank at the time about 30 people across the entire industry that knew what we were trying to do, which is quite sad. And to put that in your transformation context, they were 99% previously advantaged. So that's the reality of the paradigm we come from. And that's as recent as 2001, 2002. So the vexing question was, now here we are, Dapper Mesa, we're going to take on this industry, we're going to transform it. What does it actually mean? And at the end of the day, we discovered insurance is people, 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 people. You speak about product, it's people. You speak about life, it's people. You speak about any element of insurance, the asset, the car, it's people. It's family, it's people, it's people. And that took me to another challenge that we had in society at the time, as I was reflecting, was the question of Our Lady, women in society, the amount of single moms there were, the education gap, the real challenges around, there's quite a, and I'm going to sound controversial, so I apologize if I insult my industry or people, so it's not meant out of any disrespect for anybody or anything, but we went through a phase of, we're all trying to uplift society and everybody's trying to sensitize in terms of the new South Africa, and we're going to learn a language and we're going to sing Boka, 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 Bafana, Bafana. When we came to the real, where the rubber hit the road, we didn't have transformation. We didn't have, forget those phrases, transformation. We didn't have real people emerging who could actually do those tasks. And I often felt at the time that when we were looking for talent in South Africa, particularly talent from our black communities, we looked with one eye. We looked, well, there aren't any people. There's no women in the industry. And that's sort of, so when you say your philosophy informs your methodology, I came from that paradigm, quite simply. So we said, well, hang on a sec, we can either be all precious and sensitive and blame it on this one or that one, the whole sorry saga that we normally do in South Africa, or we could be, take the mantle, the bull by the proverbial. So we then partnered with Wits University. We went and spoke to the School of Economics. We fashioned a course around liability in our sector in particular. That partnership started in 2008, 2007, 2008. And we put up the highest research grant at Wits for masters in our field. We then put up also an honours grant for honours students who want to study liability and honours in risk management and insurance. Looking back over the very short space of time, how many people do we have at Camargue who've been through that have been and seen? Probably 8, 7, 8, 10. But I've had 20 students emerge from that, and including my Director of Operations at the moment, who was my first master's student. We did the first research document on the King Code, King 3, and Code of Governance, and how it will affect directors and officers' liability, which is one of the products we do. And then we sort of went, hang on a sec, there's a more vexing question, so we went right back to school. And we formed a partnership with some of my ex-colleagues. I'm from a Marist background, so religion forms a big part of my background. And we then partnered a lot of the teachers and ex-teachers, and we formed something called the Lady Stars. We formed a life skills coaching clinic with kids and lady learners from grade 10. We asked each principal to choose 5 leaders from the school. And we just, as an experiment, wanted to track their careers. So you start at grade 10, no academia, just life skills coaching. So how to manage yourself, manage goal setting, manage your environment, manage negative experiences, etc. And then sign a social contract with us. And then see how they track through either their matric year, and whether they get to tertiary, and whether what economic thing they want to follow. So far we've put through over 600 lady learners through that program. Many have been through our company in terms of our internships and learnerships, and they're sitting out in industry and broader industry. But those lady learners are out there. So it was a very vexing question for me as to where the talent's going to emerge from. Is it going to emerge, or are we going to help it emerge? To a very selfish goal of making sure our business works. The other big problem we had with this very sophisticated model of insurance was brokers did not understand what we do. Insurance industry just said, well, hang on a sec, it's too much. I want to compare apples with apples. I don't want oranges with pears and bananas and all this other stuff. Just give me simplicity. I said, well, it's not going to work like that. So you kind of had to have the dogma of perseverance in this space. So I realized that my brokers is my big distribution channel, or my biggest challenge. And we then formed what we called our Liability Academy for Brokers. So it was purely, and you'll see some of the booklets in there, which is to teach them about liability, what it means, how to sell it. We created quite an academic. We got SACWA approval for the qualifications. We took it to a very formal process where they get CPD points, etc. But more importantly, it is a tool to help them sell these new products. And I'll take you through them. I mean, we'll go through some of those products. I mean, some of them are very technical. In fact, most of them are. And I'm pleased to say that in the last just over 4 to 4 years, we've educated 15,500 brokers across sub-Saharan Africa in the paradigm of selling our products, which are very unique, etc. That did take an investment, it took a vision, and the reward has followed. So if this sounds idealistic, I want you to lose that thought, because there's one of the phrases, the 3-letter phrase that I've started to abhor, because I find corporate South Africa has a great comfort with it. It's this phrase called CSI. It's become one of those phrases that just makes everybody feel okay, we've ticked the boxes, we've done the scorecard, and we can all feel great about ourselves, and we've stepped on the pavements, and life's great. But real CSI in terms of our business would be transforming a whole bunch of people in terms of becoming economically active citizens, able to run a business, able to make profit. We, in a very short space of this experiment, and it is an experiment, I mean it's 15 years in an experiment, have seen tremendous results from that. But you have to remove your blinkers. You have to look at society as society, you have to take the realities as they are. You have to take women as women, men as men, and not let your emotions or your previous cultural or whatever issues step in the way. You have to look at it is for what it is. The world doesn't care about how blue or black or green or yellow you are. They actually don't give a proverbial. We trade sub-Saharan Africa, and so we trade Kenya. We have all the issues in DRC. We look at SADC's amazing for us. It's stable. And we do Indian Oceans as well, and we trade up to Goa and South India in terms of what we do. How do we do this? We do this with synergy of partnerships and risk. So our business is written on a composite basis with Lloyd's of London. This is the world's probably largest insurer, most dynamic insurer in terms of geographical reach, types of risk. We do that with local partners, Mutual and Federal, in order to have local footprint and distribution. And we do that through another business called Compass, linked to a German entity called Hannover Re. So we've as an underwriting house, been able to harness global capital based in Hanover, third largest reinsurer, Lloyd's of London capital through the syndicates, local capital through the Mutual and Federal, or Mutual PLC, and Compass Insurance Company. So what does it mean that a little entity with less than 50 people or 50 people, how does it do that? Well, you literally have to start with a blank page, imagination, and think about what's possible, and kind of have some kind of integrity and capital backing your thing, and have some kind of academic background, and knowledge of the industry, and time and repetition and delivering builds more credibility and social capital as well as equity, etc., etc. But the most amazing part of all of those partnerships that we've been able to do is that we've been able to harness global capital to the benefit of our youngest South Africans to enter the economic space, using the vehicle of liability insurance. So if I say, Richard Branson spoke about, a plane. He's entering Virgin Airlines, and I took a lot from him. The plane was just a vehicle. He was actually selling entertainment. He was saying, I'm going to enter this space, I'm going to corrupt BA, I'm going to do whatever. But you're going to get TVs and movies, and if you're in economy class or business class, you're going to get the same as you may know, like intermediate class and all of that there. So we literally try to take the same element into commercial insurance. So it's a lot I'm throwing at you, but let me just give you a bit of background in terms of the products we do. So we insure bankers' blanket bonds. We insure all the major banks in South Africa. And we insure them across the planet in terms of all their trading, etc. We have a line on them. We don't do the whole thing. It's in the press now, so I can talk about it. So we've picked up some claims in Shanghai and Mongolia on behalf of Standard Bank. I think it's over $300 million. Aluminium theft, etc. So just to put it in sort of quantum perspective. We do professional indemnity insurance, which some of you as professionals will understand. We do commercial crime. We don't do the crime ourselves, we insure it. But it is a South African national sport. And by the way, so if we were not to be too sensitive, please ladies, don't judge me. Interesting stat out of commercial crime is that the typical commercial criminal is, and I'm quoting my forensics experts who've done all the work with me, is a married woman, 2 kids.
Married woman?
Yep. Happen to be Caucasian. Working in bookkeeping.
My wife fits that profile. I'm going to look at it.
And generally it's not driven to anything other than lifestyle spending. Casinos, shopping, trying to keep the husbands not earning enough, so please boys, you better go earning enough. So, we do cutting edge stuff. We are very proud of socially is that we do clinical trials. We insure the trials. So if you've seen some of the very impressive HIV trials that we've done in KwaZulu-Natal and that, we have insured that entire program. We've insured the program with the prostitutes who are active, mother to child, etc.
What do you insure the outcome of that result?
No, we insure the impact that it could have on either the child born through the trial, or the woman who claims that she was misinformed, or the legal consequence that follows from that. There's a lot of lawyers hanging around these trials waiting to make a lot of money, and we spend a lot of time with them. But that being said, we do. So we don't guarantee a trial.
Outcome, we don't guarantee.
No. It's the time and what could happen to the participants if it's negligence, etc., etc. So.
Just sorry, are we on question time? Or?
No, go for it. Sorry, because I can ramble on.
I've just got a couple of points that I just find quite interesting. So the rate of growth of the previously uninsured in South Africa versus inflation. So in other words, as going back to transformation as society changes, are you finding higher levels of insurance penetration into South Africa?
So if I look at my colleagues, we just chat about this because we look at developmental. As I've sort of now as a latent sort of participant in academia, we do a lot of developmental economic research, etc. And if just pure middle class South Africa, blacks are now exceeding whites as an insuring class. Just numbers. It is what it is. Transformation's happening, guys. It's around you everywhere. Just go to a restaurant. If you went to the same restaurant 5 years ago and go to the same restaurant today, the demographics have changed. The insurance market has changed, etc. So that's on the one side. And that's in terms of your middle class and upper end. And that's real. It's happening. The vexing question is just one below that. And the challenge we have is, if you listen to the developmental economists, is payment mechanisms. There's a real massive economy there. It is a massive economy. And if you go into our African brothers north of our border, it's a real economy that people have answered a lot of questions to in terms of payment in different means. But as soon as our very traditional insurers insist on a debit order, you cut out 80% of that opportunity. So debit order via traditional means will, because cash flow is not consistent, it doesn't arrive on the 26th, but there's a massive need. So you'd want to go, I'm sorry,
I've got a perfect view from opposite you.
Thank you. You'd want to find a mechanism of flexible payment for that market. The cash is real, it's there. It just doesn't time itself for payday. And that's the biggest challenge going forward. So personal accident, yes, burial, yes, all those sort of emerging kind of products. But no, the guys, a lot of our what we called squatter camps have been formalized into formal housing, and it's the same people that lived in informal that now transformed into formal housing, but have the same informal income, but they have the same insurance need. That is the challenge for us as a established industry to overcome.
If you split out sort of business risk versus your risk, like from a this major, for example, so your normal business risk where, say, you are at risk because of theft because you haven't secured your premises properly as opposed to flooding or whatever. Do you think there's a correlation between educational standards and business risk?
I'd say absolutely. I think ignorance knows no educational background.
So is that one of your pillars?
Absolutely. So somebody goes and we go to St. Stadions, you go to WITS and you follow a program and you start a business. That person's almost starting from base zero in terms of their view of what commercial risk is. They have got sort of textbook background, but practically they're now dealing with a real workforce, they're now dealing with a real physical risk, they're now dealing with clients and debtors and sales targets, etc., which is quite overwhelming and brings them back down. And then what we do is then we try and put together a framework of how do you navigate that terrain. So you might be a product specialist, you might be the engineer, just to go back. You might be a financial accountant who's got a cash and wants to start a business, and so you start a fish and chips and whatever distribution plant. So we all come from different disciplines, but the balance of if you look at a business, it's such an entity, that organic entity, that the ignorance will exist on probably 70% of that individual's experience. And that's where we try and plug the gap. So with our MQ'd philosophy, the risk transfer element's 1/3 almost. If you look at risk of an entity, there's only so much that you can transfer. There's operational risk of your thing, there's day-to-day risk, and there's your staff risk, there's the asset risk. But insurers will not insure probably more than half of what you would like to insure. So you've got to manage the rest. And that's where our educational element comes in terms of business support, etc. And that's very real.
And you manage that in effect as premiums and cover?
Correct, yeah. So what we do is we've got, so the benefit of starting from base zero with a blank sheet is we've got our global partners to forego 15% of the premium into business management and mitigation, and that is unique globally, actually. And many of our competitors are trying to find out how we do it. We simply started with a blank sheet, convinced our global risk partners, and they believed us.
Yeah.
And we've delivered on the promise over 15 years. So that's where we are now. Yes.
At the moment in your industry, what did you say is your biggest liability? Would it be for cyber? Would it be for criminal? What is emerging most?
Oh, okay, so topical at the moment is cyber because it's in the press, it's on Clark Branch. We do cyber liability, by the way, closely linked to commercial crime. That's quite topical, it is happening, and as a combination of both, it's probably our biggest risk. The other thing that's emerging, what a lot of people don't realize, and it's the smallest part of our portfolio, is our labor. We created platforms for equality and access to resolution called the CCMA, Labour Court, bargaining councils, etc. Do you know that we are the most litigious labour country in the world? because we have a free forum for people to go to. So they can go, so any little entrepreneur starts off. So there's a stat. We've looked at the number of cars on the road. We've looked at the amount of vehicle accidents there are. We've looked at the number of employees and the amount of cases of the CCMA. You're actually more likely to go to the CCMA than have a car accident. No, that's, in fact, we say, well, you're more likely to have a car accident than wait to the CCMA. Something like that. So if you look at the vexing question that faces a lot of entrepreneurs is people. People will execute your product, will deliver on your product, and often the entrepreneur is caught in a master-servant relationship and brings a lot of baggage from his side, and the labor bring a lot of baggage from their side. And in our South African context, you've got to manage that, and we spend a lot of time managing it. So that product's called employment practices liability. So it's probably our most single higher risk incident product, believe it or not. And it's informed by our history. Again, people feel vulnerable, marginalized, underpaid, etc., etc. And here's a little poser for you epidemiologists, which I'd like to put. And I had a little thought in my mind with affirmative action and BEE. And I thought affirmative action is actually such an amazing thing. We had 48 years of it, I think, or 40 years of it. And the Nats, look at what it's produced. It's produced bastions of academia, bankers, etc., etc. But what it's forced is an evolved society who's had the best of education to now dig deep and go and find means to express themselves economically, away from the protection of government, or to try and seek employment from government. So what's happened here, quite interestingly, is that a lot of these young men and women have now gone into dads who are quite affluent. They go and source capital. They're in the network, the boys club, the country club, the whole thing. They go and start business. So what's actually happening is quite a sort of perverse thing, is that affirmative action in BE is enforcing white wealth and creating more master-servant relationships, because the employees still are sourced from a predominantly black background. Not a bad thing for the economy globally, but you've got an emerging populace that is now emerging academically, coming through varsity, who is now catching up with those young lighties who've been to St. Cyprian's and Marist Brothers and enjoy the privileged background and what else. So if you take away all the emotions around affirmative action and your history and your background, it's actually quite an amazing thing. It says the privileged must take care of itself, and the underprivileged need a bit of protection, whoever they are, and they need to be brought up. The privileged then become the owners of capital and reinforce almost a paradigm until hopefully there's a little catch-up that happens at some point, which we hope happens sooner than later, because the country is in desperate need. So sorry, I'm just putting out a little statement there. So. Apologies.
Interesting to know what you and Piketty will talk about that.
Yeah.
Guys, are there any other questions? I know time is running out. Sachava, anything from your side?
The fine print from the insurers. Take the fine print.
You can't read it.
Yeah, quite tedious. You can just take that.
Yeah, no.
But in short,
You're quite spot on. A lot of it was, there's a whole question, there's two issues driving the industry at the moment. The one is contract certainty. So wherever you come from in your background, you must know that you're entering a contract that you understand. So if you're from it's a vendor background and offer you something in English and pack it with all sorts of jurisprudence from America and Roman Dutch law and that, there is no contract certainty because you don't know what the hell you're reading. You might sign something, you might put your paw print on it. So that's the one thing that we're facing as an industry, which is legislated now, regulatory. The other one is called treating customers fairly. So it's become the two overarching regulatory frameworks that we have to acknowledge that people have come from backgrounds, education, etc., and that is the reality. So trust me, if you just challenge the insurer via the ombud or the courts, and you didn't understand legitimately the fine print, you're probably going to win that case at the moment. So if you look at the guys that are doing these stupid ads on TV, King Price, they've got the most amazing wordings. We have actually unpacked it. Now, we come from a very technical, academic, heavy background, and we've unpacked that wording. And it says things like, almost like, hey, my bra, if you don't pay, you got no cover. It's almost written in that sort of lingo. And it says, like, listen, if you didn't tune me, what the hell's going on? And you hit a few little things there, but we're not going to, come on, be straight with me. It almost talks to people in that straightforward thing that I bring in high legalese, etc., into the contractual equation. And it's quite an amazing wording, actually, if you look at it. Because, I almost feel comfortable wanting to insure with it. Because the history of insurance on the short-term side, in terms of cars and personal lines, is not very good.
In your opening statements, there's 3 points rather. Mercuria aligning it to leadership and alluding to some of the perception of industry and obviously your clientele base. Understandably, you pointed out that some guys are in there for the comms and for the short-term earning. You spoke about sustainability. In my view, leadership in this aspect is having a passion and essence, trust and integrity. And hence I'm just leading on to the gentleman in terms of his fine print. And unfortunately, that's a stigma amongst us as a man in the land contemplating insurance investment away.
A well-deserved stigma, actually. Because I think, for some reason, I can just remember my parents. It's a very smart guy with a suit like mine. We arrived, those days with a tie. Hello, Mr. So-and-so, come and collect home service insurance. Because he arrived with a suit, they just trusted him. Yeah. Obviously he's the Fundisi or the main guy or whatever, but we're so ready to hand over trust to this man who arrives with a suit. Hence the likes of Fidentia and all the scandals and that's it. So we've got a lot to overcome as an industry, and I think we're getting there. I think there's a long way to go, and I think it's not something that's going to be, as long as it remains a grudge purchase, it's never going to go away entirely. So what we're trying to throw at you is free trips and rides and all the value-added services, and if you've got a puncture on the road, we'll come and fix your tyre for your lady, this, that, the other. So there's been a big move around trying to be more client-centric. And there's big investments in it. That's costing the industry billions. And the competition is quite good on that. So that will take time. But you're never going to remove insurance as a grudge purchase at its element, at its root.
Except you're working at a far more superior, academically complicated group of up-and-coming adults, so it's going to become more and more challenging for the industry to try and keep on the message of, say, spend your money and become wealthy.
I tell you what, that's on the life side, and it's quite a vexing thing for me, because through all my investments in the youth, and that I'm seeing a lot of I don't know what they call Generation Y.
No, they're now the millenniums.
Millenniums, yes, like I can't keep up. But their loyalty to us as an employer who invests in their careers is 2 to 3 years maximum. Their need to, and how they shop is just totally different. Google is God. It sounds terrible, but that's the bottom line. So I'd go with a bunch of guys. I took a whole team down to the Curiosita coast. Now we raise money for charity, and we cycled all over the Knysna forests and Karoo and what else. That whole mix of demographics. And we were asking questions about this and that topology. One guy took out his book and he's checking out the leaves, and the other guy had his iPad, and his lights said, "What's wrong with you?" He's like, "Just Google it, man." Yeah, it's like, yeah. And in purchasing behavior, it cuts through everything. And so we as an industry have to say, well, we are grey-haired generation, whatever, baby boomer generation, still dominating the industry, owning the industry. The consumers are changing dramatically.
That's a good
It is,
adaptation to the movement.
and as long as the baby boomers are owning the capital and the businesses, and they're not being flexible, they're going to lose out. So if somebody takes that gap, and there are businesses that are actively looking to take that gap, That's the basics. It's uncomfortable, but yeah.
Guys, let's take two last questions. I think there's one behind me, and then there's Jeff on that side, and then we conclude, and then we can formally continue.
I'm looking. My question is, I would say it's a double-edged sword. It's twofold. You're looking at African economies. South Africa having almost a stagnated growth. In comparison with the other
North of our borders, yeah.
North of our borders, growing at huge leaps and bounds, even though it's from a very small
low base.
Do you have any alliances, any partners within in that context of those markets? If so, what is your strategy in terms of if you're looking at north of our borders, most of the economies are structured around, they are not so formal as it were, but they're growing very fast, even though they're not very formal. It's very informal and high growth. What is your strategy going forward? Because South Africa might as well go that route a couple of years down the line, because looking at SMMEs, you mentioned the mere fact that 15 years down the line, SMMEs are not having that much of an impact. But if you look at north of our borders, look at Kenya, those are the driving engines of those economies. If South Africa goes that direction, do you have a strategy to counter that in terms of looking at the informal but high growth areas?
So we started off, we started off our business with quite a mature market here. And immediately we looked at, we battled in the centre, which is Joburg and Cape Town and Durban. So we looked at the periphery, and the periphery for us was SADC, Namibia, Botswana, Swaziland, Lesotho, etc. And we thought if we did a little bullhorn pincer move, we'd force the centre to come to. It worked like a charm. So our strategy in terms of Africa is to partner with local insurance companies, take our knowledge, our leading position on insurance to them. We look to develop their staff, and we ask that they retain as much risk as they're comfortable with and send the balance on to us, and we will manage that for them. Generally, in our classes, the risk retention appetites are quite low, so it'll be $1 million or $2 million. We write up to 250 per client. We can go to $1 billion. Again, it's informed by education and networking and partnerships. So we go and sit with the Jubilee in Kenya or a Botswana insurance company, and we sit and we develop their technicians, the underwriters. And so there's two things it does for us. One is we're not on the ground, so we shoe leather. They're on the ground. It's language, it's culture, and it's understanding of their legislative environments, which they have a superior advantage over us on. So if you bring them in for a good portion of the risk, enable them to write your classes, that is a far more, and it speaks to the whole idea of networking, which is exactly the formation of the business. I mean, I've got over 400 risk management partners across Africa that actually service our clients across Africa. From kidnap and ransom to all sorts of evacuations and things like that. So the concept of networking, working with people on the ground, and not thinking that you are going to be the Americans in Africa, not thinking that because you speak English, you're superior, or if you just humble yourself to the fact that it's pure commerce, let's enable business, let's respect the local culture, let's play the guys to advantage, let's add the knowledge we can do so in a very humble way, a genuinely humble way that respects the partnership. You fly, and we have benefit from that so far.
So the answer is yes.
Yes. So.
Last comment, Jeff, and then we can break.
How do you see technology impacting your industry in terms of the rise of peer-to-peer financial services? I can sit in South Africa and I can lend money to EU citizens. So how far away is a global Lloyd's where I can actually underwrite insurance risks in the same fashion?
You can do that right now with Lloyd's, because we partner with Lloyd's. The stumbling block is contract certainty. So if your regulatory framework in terms of jurisdiction as to where your risk resides has a very restrictive framework, you could find that the claims payout could be restricted, or your premium transfer could be restricted. So the problem is quite simply that In Africa, we've got very protectionist economies. We've got Reserve Bank exchange controls that restrict the movement of monies and premiums. The ability to trade, Lloyd's trade.
It might work the other way. I can take insurance in South Africa outside of the South African regulatory system using that precise mechanism. And I might use a cryptocurrency to pay for it and receive my benefit.
Absolutely. So what we've got at the moment is very exciting developments on the expat insurance front. So we've got, everybody talks about the 5 million Zimbabweans that are here, and our friends from North of Africa. We're looking to insure a whole bunch of them locally, paid locally, but insure their properties in Zim, Nairobi, wherever it may be, Harare, Butare, wherever. And then settle their claims. So if they have a car accident, the parents have a car accident, they get settled here, if premiums are paid here because the earnings are here. The big problem is when Uncle Bob and co realize that there's a big portion of expat money sitting in an insurance vehicle that should be insured locally, would be the intergovernmental pressures. So it goes back to a regulatory framework that needs to open up. You can do that now, but I can assure you the bulk of that is it's illegal. Yeah, it's illegal if it affects any territory. So as Lloyd's, we trade in a whole bunch of countries, but we're aware of the countries where the regulatory framework restricts us, and it's the majority of African countries that does that. So we've got to manage local aspirations, forex, foreign exchange issues, etc. Where your earning capacity is outside of that country, that there's nothing that local government can do. However, at some point, if there's a boodle of cash sitting in a forex account that represents, call it Zimbabweans insurance premiums of X hundred million or $1 billion, there will be governmental to governmental forces applied.
So there's certain instruments, for example, like letters of credit, which are, to all intents and purposes, inter-jurisdiction.
Yes.
They cover international trade. So it's a bunch of money that's actually not sitting in any jurisdiction per se. That would be quite an interesting place to be insured.
It still comes down to a jurisdiction, though. It still comes down to a jurisdiction. That's the.
Somebody's.
Ladies and gentlemen, do you want to make any last comment? Because our time is running out.
No, simply thank you very much for the opportunity. I feel very flattered to be here. Thank you very much. I just offered a very practical journey in the little world of insurance and our niche of liability. I'm not sure what relevance it has to your academic pursuits, but good luck with your studies. And I've got a vexing question for you about the commercial value of an MBA versus a PhD.
Emeka, do you want to answer that quick?
No.
I'll tell you why.
Actually, somebody asked me a very interesting question. He asked me whether PhD is as difficult as MBA.
Oh.
Okay, that's not.
So yeah, when the person asked me that question, I said, "Oh boy, you don't know anything."
Okay, so let we must get that. Can you answer that question? He just went through that process.
Okay.
Just a short answer.
Well, I would say
We'll try again. Let's replay.
Well, the bottom line for me.
There's huge commercial value in the mere fact that you're looking at your impact more on a global scale, and like we've already alluded to, you're adding more to the body of knowledge than you would do from an MBA perspective.
Yes. No,
Let me answer that question in a small way.
Oh man, you had your opportunity.
Please. You know, MBA is a professional, okay?
Yeah.
And when a professional gets stuck, he needs a theorist to get him moving. That's where he needs a PhD.
Well, I must tell you, because
that is all. No more, no less.
I've done the journey, but I was told as a young man to avoid doing a PhD until I was old enough to actually know something and add additional value. So now's the time. Old enough, now's the time.
Mitch, thank you very much, and I think I really appreciate the integration that you make business really almost in a Da Vinci-like way, more holistically, a reality by including the people at different levels and not just focusing on the product and the process. Yeah. So I think from a Da Vinci point of view, that's hugely valuable for us, and even as part of our community, we really appreciate that. And Storm, I hope we can continue more engagements with them regarding this matter. Although they've got alignment to other institutions also, but we've got stomach. This is a little gift.
Oh, thank you very
And
much.
what we hope you could do, you must unravel this problem. And when you've unraveled it, you can post it on WhatsApp and tell us what was the solution.
Can I give it to my 4-year-old grandson?
No, you have to do it, and we will see how long does it take you.
Okay, certainly.
But thank you very much. Appreciate
Thank you,
it.
sir. Thank you very much.
Please join us outside. I know we ran a little bit of time, but I think we enjoyed the discussion. But join us outside.
So we're saying that you do this